We have brought together more than 10 organizations on the continent and guests from around the world. And a big part of the global discussion on taxation at the moment is what is called the taxation of the digital economy. The emergence of digital-based businesses have thrown into the fray whether the current tax systems that we have is updated enough to deal with the new forms of business that has developed over the last decade and that is continuing to develop. And so when we have increasingly the presence of businesses in African economies that don't have a physical presence here but do business here, how do you tax them? And so when you take an Uber ride, or when you book through hotels.com or bookings.com, or you use Airbnb, these are good innovations. It's good innovations globally, it's good innovations locally. The issue is that when you have an economic activity in a country, you must pay taxes in that country. But if you are not there to pay those taxes because your business is not registered there, you don't have representatives there, nothing, then you are able to do business in that country and get away without paying tax. Now that is a global phenomenon, and that is part of what is being discussed. But whilst we wait for that, how do we deal with the tax losses as a result of that? And that is one of the key issues that we must and should be discussing here. But then of course that's global businesses, but there's digital businesses, but there's also the taxation of what they call other forms of intangibles. And so when a normal multinational company, digital or not, engages in your country, and before they declare their profits, they are able to deduct before profits interest and interest on loans. They can deduct service fees and technical fees for intellectual and other inputs that come from outside your country. They can deduct these from their profit before they pay taxes. Then you begin to have a problem if you do not have rules that govern this, because it allows those subsidiaries, those African subsidiaries of these companies, to strip out their profits, and before they then declare their profits, they then pay a vast reduced tax. And so they can end up paying, as a corporate company in Kenya, in Uganda, in South Africa, they can pay an effective tax rate of 3% after they've made all those deductions. But they must compete with the same company that sells cars or clothes or makes things, that is based in Kenya or Uganda or Liberia, who pays 30% tax. And so that local business starts at a huge disadvantage. And so part of this whole discussion must be about how do we change the way we tax the economy, because the world of economics have changed. I think that is the one part that I would like to share.